Alibaba is 4% of my portfolio, so I think it's only right that I give an update on how I'm feeling about the stock, given the recent earnings report from earlier this month.
Have you heard of Alibaba?
Yes, I have.
I'm one of the biggest shareholders in the United States because I love China.
The share price of Alibaba dropped 10% last week, almost immediately after Alibaba released their earnings. By the time I got around to reading the earnings report, I assumed I was going to find out something horrible about this business. Well, wrong again. Quarterly revenue was up 9% from this time last year, despite the fact that China's economy has been sluggish, to say the least. Net income was $3.7 billion, which is up from negative $3.1 billion this time last year, and free cash flow was $6.2 billion, which represents a 27% increase from period to period. And this alongside very strong financials, as the company has $63 billion in net cash. All of this led Alibaba's management to do something they've never done before: pay out a dividend.
All right, well, I had to go walk my dogs. It's raining right now, which is kind of a metaphor for how I'm feeling. So even though the business appears to be doing better, it makes me nervous when the price drops so abruptly. And that brought me to something that I think we all can benefit from listening to, and that's some time-tested wisdom from Warren Buffett.
When we buy a stock, we look to the business. Quotes would have nothing to do with it. We make judgments about what the futures of those businesses will be, and if we're right about that in those judgments, the stocks will take care of themselves.
Now, there's always a concern that these numbers are bullshit. I don't think that's the case, but maybe that's an explanation for why the current price is not reflecting what I would think would be the underlying business getting stronger. There's also the fact that the Chinese stock market is primarily driven by individual investors, which is different than the United States, where institutional investors make up the majority of the trading. This can cause for more fluctuation because as individual investors, our behavior tends to be a lot less rational and short-term driven, which causes us to buy and sell at the wrong times, often at our own detriment. What do you think of Alibaba? Let me know in the comments. I hope you'll like, subscribe, hit the notification bell, and I appreciate you again for tuning in to CMQ Investing. Talk to you soon.